So guys, I'm going to go over my analysis first. Tonight's session, I'm going to be touching on supply and demand and some more options contract charting and how you can take those trades, as well as holding on to your winners. Many of you may have had prime entry, right? Prime entries, very, very good entries, and maybe you feel like you fumbled them, right? You did not hold on to what you were supposed to hold on to, or you sold for pennies, as many would say, and missed out on a big chunk of profit, right? Leaving money on the table. We're going to be talking about how you can hold on to your winners today with a fairly simple strategy. All of my strategies are fairly simple and very profitable, as you can see. So I'm going to touch on every morning, guys. If you're not on Twitter looking at this plan, and if you don't have your own plan, this, you need to begin checking out what I'm posting in the morning, right? So this is my directional analysis. Well, this is where the cues may go, right? Solely looking at supply and demand zones, just weighing in the bullish and the bearish perspective, right? So this was posted at 9:15 this morning, about 15 minutes before the open. And I talk about bulls, right? Bulls are trying to defend the most recent higher low. Okay, right there. The demand of 367. Let me see if I can. Okay, right here of 367. If they can hold this, their target is 370, right? This supply zone right here, 370. We if above 370, we aim for 372, this resistance, and then over 372, 374, or 375, right? Looking at this as areas that need to be claimed, right? Kind of like capture the flag, right? You have to claim this, then and only then you can move to the next area where sellers may be, right? Claim that area, push. So on the flip side, I said bears, right? 370 major supply. This is that major supply that they were defending. You can see nothing really closed strongly up here. Once again there, and then today in pre-market, it rejects, right? Shorts are aiming to break the 367 demand. Okay. Once they break the 367 demand, they're trying to push price down to the 365 demand. That's down here, right? 365 to 366, this zone right there. I've also marked the previous day low zone. I always mark that. Well, what happened today, right? You can see, had you had those zones or those targets, off the open, we took those puts. I laddered 2 puts. I got stopped out of 1, so I could have had 3 positions, but I only had 2. Right here, you claim 366, 365. What's going to break after 366 or 365? The next zone. Now, why did we seemingly just jump to this zone, right? We just knifed through this 366, 365. You consolidate here a little bit, but you really just start to see price just gravitate towards this next zone. Does anyone have any guesses as to why we just knifed down, right, to this zone right here? Now, I want to push you guys. I want to see, what you're thinking. No buyers in the middle, right? Huge gap. What is the gap? Well, what are you identifying as a gap, HP? What are you looking at is like that's telling you that there's a gap? Okay. 365 and below, right, to 363, right? But I guess, well, let's see. What I'm looking at, right? News, okay, maybe not so much news. Volume profile, right? FOMC news today. Okay, right there. These big green candles, okay? You have to be very cautious of these, as these are very dangerous, okay? These, look at it like if you're rolling a ball down a hill, right? If you roll a ball down this hill, right, it gets kind of bumpy, right? You can see how it was kind of bumpy right here, kind of consolidation. It's not just knifing down. Once you get into this steep, where it just ripped up, these candles right here, you can see it just slides down, right? It just, with momentum, slices through. Well, why does that happen? Okay, we've talked about this before, but I'm going to mention it again. When you get these candles, right? Like this candle or this candle, this candle, and this candle, there's not a lot of orders in these candles. Even though that there's volume, the orders are in chunks. So what I mean by that, right? So the orders are going to be placed like this, right? You have big jumps. If you're in this trade, you probably remember you're just like, you know, in that huge euphoric state, like, oh my gosh, the money's flowing my account if I'm in calls, because the price is jumping, right? So what happens on the flip side? Okay, see that green candle? Well, if that buyer stops out, right, what's going to happen? It's going to knife down to the next buyer. Okay, this buyer stops out. What's going to happen? Shoves down, right? And so on and so forth. So don't look at these candles as if these are strong, like, oh, if price comes back down, there was these huge green candles on large volume, they're going to absorb there. Absolutely not, right? Because you saw today, you were punished if you thought so. I also mentioned today in the stream, right, I got wicked out of my ladder right here, but I saw some traders in the chat talking about going long or just flipping to calls, and I was like, you know, and after this knife down, I said, you know, who took calls, right? You know, what did you learn from that? You got punished because of this, because instantly in this bearish trend, we talked about it, I was talking with Gonzo, where are sellers selling? Does anyone have any idea as to where sellers were selling at this point in the day? What was that algo hitting on? I mean, FT Mattis, I mean, you know, sure, half rate hike, whatever. I mean, everyone knows the rate hikes are going to come. Market makers understand that. They just use these kind of forms of news as to their advantage, right? I mean, did you not see that we gave up all of our gains from the day prior? VWAP, right? VWAP, where were the sellers selling, right? There's one of the earliest lessons I've had in regards to VWAP, right? Where or how much time is being spent above or below VWAP, right? How much time being spent above and below? Not a lot of time being spent above. You see large upper wicks, large upper wicks, large upper wicks. A lot of time below. A lot of traders may think, oh, that's consolidation. Well, if it was consolidation, you would have seen, oh, well, there goes all my zones, right? They're all gone now. Oh, there we go. Cool. You would have seen a horizontal consolidation. You wouldn't have seen lower highs consecutively and lower lows consecutively, right? Yeah, exactly, Berkey. That it did. I mean, they did, right? Imagine this trader. Oh, I want to go long on this green candle. We're about to bust VWAP and squeeze these shorts, right? What kind of mindset is that? It's a failing mindset, right? A losing mindset, because you're overconfident. You've already lost the trade. You take this long, you know, and you're like, oh my God, I took this long on a breakout. I didn't know what to do. I didn't really know what I was doing. Why did I take this trade? Where's my stop loss at? By the time you're thinking about a stop loss, it's too late, right? It's too late. Then you're sitting down here, negative 30%, negative 40, negative 50. What constituted you to go long here? Absolutely nothing. Absolutely nothing. So in today's lesson, I want to teach you how to trade on the right side of the trade, as well as understanding what zones we should be targeting and how to hold on to winners. So going through here, I think I'm going to touch on some supply and demand. Okay, some supply and demand, maybe on SPY. Okay, I'm just going to practice. We're going to go on like the 10-minute chart, okay? You guys can follow along, try to draw this however you'd like. Honestly, you can go on the 1 hour. It's probably a lot easier, okay? Now, on the 1 hour, when you are charting, right, looking left, I'm sure that's a term that you guys have heard, is very key, right? Because this is showing you where all the orders were that have gone through on the book, right? These have been placed. So you know that if there's an order that's been absorbing here, you can visually see that there's this kind of horizontal level where buyers are defending 450, right? Or they keep absorbing around 450. Okay, so if you can visually kind of see that, you know, where can you find the zone? Where can you find where they're actually buying it? Okay, so what I like to do, I like to capture these lower wicks, right? I like to draw these as zones. Sometimes I'll just draw like, you know, I'll draw from the base of this lower wick down to the low right there. I'll draw a zone like that, right? Capturing these wicks. Edit the properties, right? Extend it out. a week or so, whatever, right? And you can see just by capturing these two wicks right there, drawing a box off of it, right? They tweezer bottom out of the demand, right? And then they're going to test this demand either in the overnight session or tomorrow morning, right? Many times also on the intraday, right? If I know it was a dump day today, but if we're drawing zones, right, we should always be looking at like this. I always mark the previous day low, right? So draw a lower wick like that as a zone, edit the properties out. And I know even though it is shoving down, you can see where buyers were slowly accumulating, slowly, right, testing the waters. No one wants to stick their neck out completely, right? But you can see no one breached above VWAP all day today. One rule about trading supply and demand zones is that you must not blindly take supply and demand zones. If you're ever like, oh, well, price is in demand, I'm just going to buy it. Okay, well, look at what happened to those buyers that said, hey, price was in demand, let me buy it. You have to have a proper thesis built upon this. So overall, let me see if I can go on NQ here. Maybe go on like the 4 hour. Okay. Some things for zones, right? What I really like to do or look at are looking at like areas where price is being respected visually, right? So we can just draw this like this, green candle, or capturing just the upper wick right there, right? Edit the properties out, extend this to whatever 5 months later, and you can see respected here, here, and here, right? Also, on the flip side, you can mark down here. This is just for practice. This is not going to benefit you for the real time. This is for you to practice zones and seeing what actually works and what is being respected, okay? So you always want to look around reversal points, right? One tip that really has helped me, especially when I was relatively new to trading supply and demand zones, was marking the support and the resistance. So you can mark like support, resistance, right? And then you should try to beef it up a bit, right? Trying to identify where those buyers and sellers really are accumulating. So really, you see these lower wicks, right? I'm going to draw the lower wick zone, okay? I'm going to draw this upper wick right here. Right, remember, every supply and every demand zone does not mean that its price is going to be absorbed or rejected completely. It's an area where sellers may have orders and where you should really be watching for possible either continuation or rejection, right? Okay, and we can see here, obviously, this is in hindsight. You can see if you drew the lower wicks, right? Very, very low risk. Does not spend a lot of time here. Low risk setup as well, right? Wicks down just a little bit below 13K, really to 13,492, right? But pushes right out of this demand. You can see, demand absorbed, absorbed, absorbed. This was the last kind of tap before they squeeze this up, okay? Where are they going to squeeze it up to? Well, you had this zone here. If this zone was to be breached, you also have other zones, right? So you see where it's rounding off. Mark a zone off of this, right? Mark a zone off of this and this, just to practice, right? If you're awful at supply and demand zones, having a hard time understanding them, just see what is being respected and what is not. Okay, what's being accurately respected. You can see push is up. You already cracked a higher high. This is gonna come back for a higher low at some point. Okay. When it's trending like this, supply and demand isn't the best tool for the continuation of this trend in either direction, whether it be up or down. Really, it's great for consolidation phases. So like earlier in the year, this was about November, December, right? This time frame, you can mark, right, the high. Oh, 1 second. The high, the resistance, right? And we had this data very early on, okay? The high right here, okay? And then you kind of have this low, or even you can mark this low, you can mark this low, whatever, okay? Just trying to chart this out to the best of your ability. You can also see this was like a left shoulder, head, or right shoulder. Just draw your zones, right? Draw that zone out, a large upper wick, okay? Neckline of the head and shoulders here as well. You can see every time it breached this neckline, okay, it was going to go to this zone and it tested this zone, okay? Every time that it breached this neckline right here for the inverse head and shoulders, left shoulder, head, right shoulder, continuation to the upside, right? Mark that support. see where those buyers and sellers are on these zones, okay? You can see they absorb here, they try to absorb here, they try to give a inverse head and shoulders, but they end up, right, breaking the zone, basing to the downside, and flushing, okay? So I'm going to touch on the Qs today, right? A few of my, my analysis as to why I took a few trades and why I held on to them for so long, right? Some trades that I took today. Let's see. We had the 367 puts. Those went from 210 to 4.5, so over 100%. I scalped Tesla 120 calls for about 50 bucks. The Nvidia 267.5 puts, we took these for 4.4 all the way to 7.5. Okay, so about $310 a contract. Very nice gain off of one trade. And that's per contract. That's not the total gain on the trade, per contract. You buy 2 contracts, you would have made like 600 plus bucks. The Qs, another one, 363 puts. I took them at 85 cents. These went to $2.20. Okay, very, very nice gain, almost 200% on that one. 362 Ps, 1.5 to 1.72, nice little 10%er. And then my last trade of the day, I took the 365 Ps all the way from 2.7 to 4.1. I think I got on the last bit before I got stopped out on the remainder. Okay, I'm going to touch on why I took these trades and how you yourself can take them as well. Okay, now I'm going to leave a lot of my drawings up from earlier just so you guys can kind of look at what I am, or what I had been drawing. Remove that, clean this up a little bit. So off of the open, I scalped this long, right? I went long. I think I took the 369 calls or something like that, solely off of it. And it was a good trade, right? We took this from here. I think, what was the entry? It was about 1.8, and I got out at 205. Remember, the morning, everything off the open is typically a scalp for myself. I'm just looking to line the account up with some profit and not take anything with too much size, right? Everything off the open should be a quarter size or half position size at most, right? It's very risky. No matter your experience, you do not want to put your neck out, okay? So I took this long here, exited up here on the higher high, came back, remained in my position, scaled the majority of the rest out, because I always say the market does not give second chances very often. You guys will hear me say this all the time. If you didn't scale out the first time here and the market gives you another chance to scale out where you should have scaled out the first time, you better lock in some gains, right? Because what happened after that, right? They washed out the longs, right? They washed them out. Okay, and you guys see me, I scream all the time, right? Let's see. Scale, right? Lock in gains, right? Scaling out, lock some in. I'm always telling you guys to lock your profit in, right? You must always lock in your profit, because that's the only reason why you're here. You're here to, either you scale out or someone else will. Exactly, Dep, exactly. So I took those trades, right? Let me remove that. Oh, that was one. So also, why did I take that trade? This was the level that I was basing risk off of, right? I had kind of a demand zone drawn here, and I had a target of this consolidation. You see the resistance, 368.36. I had a target of it there. Now, I was looking for the possibility of the Qs basing out here, right? And then pushing up to either the previous day high or the pre-market high of about 370, that 370 area. But obviously that failed. But before that happens, we lock in the gains, of course. Now, I get stopped out on the remainder after locking in majority profit on those original calls. Now that I see, hey, I take a step back. I'm like, hey, price, it's got a big knife. Normally on the trade like this, I'm resorting to the 1 minute, 9 and 20 EMA. I'm like, hey, I should wait a little bit. I'm not seeing that respect of the 9 EMA, right off of the bat. This could just be like that wick out, right? Wicking out retail before they rip it, to new high a day. But I waited, and I also was seeing, hey, they sold heavily on VWAP. They sold heavily on VWAP again here. And then once I see them reject with the tweezer top on VWAP on the 1 minute, I instantly get in. Now this candle formed down here, but we got in right there. This is where that arrow was. Okay, and it breaks down. You do crack a lower low, and I was telling everyone, hey, lock in gains because we are in the demand zone, right? That is key. On this next pop up, even though that it was very close to the demand, I had seen the trend that was beginning to develop here, right? We saw that this trend was creating lower highs, lower high, lower high, lower high, and lower low, and looking for that next lower low, the crack of the support and the fail of the demand. Now, why do we not take puts in demand? That is solely due to the fact that this is where buyers are. We want to get into the trade before buyers have the opportunity to either buy this, right, to defend their position, or we're getting in before the trade so that we can be a part of them stopping out. This pressure right here, this red candle and this red candle, these are not shorts shorting, right? These are buyers turning into sellers, buyers stopping out, and you as a short or as a bear will make money when they're stopping out, right? That's the whole goal. Your goal is to not add pressure to the selling in the demand. You're too late. That's why I'm not a breakout trader, okay? What did I do here? Pushed up, pull back, pushed up, pull back. I take the pullbacks, all right? I also take, hey, I'm like, hey, that's a pretty steep flush. I took the 1 minute 9 EMA tap right here. I get stopped out, right? And I was like, oh, well, they're shorting on VWAP. I could 84% rule this, but I'm just going to stick to my original 2 positions right there. Now, many people are like, how did you know it was going to dump? I did not know it was going to dump. Nobody knew that it was going to dump like that, okay? Nobody knew. We only were trading the chart presented in front of us, and the market dumped right here at that point, all right? Here, I'll type in, 1 second. So right here, the market dumped right here. When we cracked a lower low, I said lock in gains. We hit this demand zone, right? This 366, 365 demand zone, okay? Once we hit that zone, I was locking in gains. I know that buyers have the opportunity to lock in profit here. Now, when buyers were not present in this demand, I was going to hold on a bit longer using my 1 minute EMAs, but due to the fact that you have such early entries at times, how do you hold on to your trades? Right now, I'm going to clear the chart out now so you can kind of see this. So I'll mark the entries here and here so it's a bit more clear. Hopefully that should be much better for you guys, right? How do you hold on to this trade? Well, you could have been like, well, maybe the 1 minute EMA stopped me out. I only got stopped out on the ladder right there. But why did I not get stopped out on the original 2 calls, right? The original entry and the ladder. Solely due to the fact that this did not force me to stop out. I was not underwater enough, right? They did not close candles with strength above VWAP. So yeah, I get wicked out of the ladder. Remember, ladders are not full position sizes. They're normally about a quarter or a half position from the regular position sizes, right? Or as close to a regular position size as you can get. How can you hold on? Well, you see that the VWAP projection maintained. Okay, if you get a big dump like this, watch for your 1 minute EMAs to hold, okay? Remember, your goal as a day trader, we talked about this last night, is not to take a trade from the beginning of the day to the end of the day and have a perfect scale out, right? That is not your goal, especially when trading options, okay? Your goal is to capture pieces of the market, right? Little pieces like this. These pieces are consistent and they will add a lot of money to your account just by solely finding those. Many times I see traders that take a trade from the beginning of the day to close down here, right? Taking, how many hours is that? What, like 6.5 hours, right? 6.5 hours holding a trade. And I make more money than them in this amount of time, right? This is from 120 to 130, right? Is that right? 120 to 130? 10 minutes, or what is that? 120, 150. I can't even count. All right, so 30 minutes, right? I make more money in 30 minutes than the trader that holds from point A to point B all day. Why? Because you can consistently size and take, predefined risk day trades, just trying to capture these pieces of the market. And you can capture this piece, right? And this piece and this piece. You only need one good trade a day, right? Many traders say that, even though I take probably 10 or more trades a day. Okay. So how can you hold on to a trade? Well, if you have such a good entry here, right, and the 1 minute EMA start to crumble, right, you can bump it up. You cannot stay on the 1 minute EMA or the 1 minute charts all day. You must at least check out the 5 and the 10. If you look at the 5 minute chart, where this would have stopped you out on the 1 minute, this is where those 5 minute EMAs, right, are now catching up. All right, the EMAs are now catching up. Now these algos trading off the 5 minute or maybe the 10 minute now are hitting this trade, right? They're taking the shorts off the EMA. But if you gave those positions up, right, those highlighted circles where I entered, or what would have been entries on the 5 minute algo, right, you would have gotten wicked out, right? You would have gotten your stops hit, whatever, and you would not have been red on the trade had you had an early entry. Many times I see this, right? I see this exactly. I see traders having good entries, right, and selling all of it right there, selling for a very short amount of time, and not understanding that they have, right, some of the most prime entries on the chart. So remember, always review different time frames. Always look at different time frames in your trades. You must, okay? Sticking on 1 minute or 3 minute is not good enough. If you were looking at the 10 minute all day, you're gonna, if you were looking at the 10 minute and you hadn't looked at it all day, right, you're gonna feel a little foolish right now, okay? Because it was very clearly bearish, and every pop up was just another pop to short, right? Did the 10 minute EMAs tell you to sell today? Did they tell you to stop out even? Right? No. Nope. What's our 9? Our 9 is typically our dip add area, the area between the 9 EMA and the 20. A strong move above the 20 EMA on any time frame is typically your stop out, right? Did that occur today? No, it did not. Right? Not at all. Honestly, many of you traders listening right now will benefit solely by trading the 5 minute and the 10 minute chart. On the 5 minute chart, right, looking at your entries, you had so many entries. Entry there on the 5, right? Pushes down, rips up to the 5 minute 9 EMA and VWAP, right? Perfect entry. Entry, entry, entry. You may have gotten wicked out here. That's fine. You're not going to have every trade being perfect. You're also not going to have every analysis, pinpointed down to the most accurate kind of, entry or accurate trade thesis. All right. So moving on, any other days, you guys should really be looking at this, right? How can I get into these trades? You can see, right, entries, entries, entries. What is going to have you hold on to these trades? Well, right, you have different levels of confluence. You can just use the EMAs, yes, but also you should use with your EMAs your pivot points, right? Talking about higher lows, higher highs, and lower lows, okay? You can see this, boom, right? Higher lows holding, right? Every time it dips down, mark your low, right? Pops up, dips down, mark your low. But this is very extended, okay? We must also note this, not so much anticipated, right? Just like anything in the market, you cannot anticipate everything. You cannot cover everything. But going through, it does not matter. I told you, you are only looking to capture pieces of the market. What was left at the end of the day was fine, right? But if you were able to take a trade off the 5 minute 9 and staying within that trade because of the 9 EMA and marking your pivot points, right, your higher lows along the way, you took a trade, right, from 365 all the way up to 368, a 3-point capture, capturing 3 delta, okay? So, your goal is to not take the trade from here to there every single day. You will lose your mind trying to do that because it's very difficult to do so. You're going to experience a lot of emotions. As a day trader, your whole kind of process of trading is time exposure. How long am I going to be in this trade, and how profitable am I going to be in regards to the time that I am in this trade? Okay, what about today? What would be the difference in shorting the pops above the 9 EMA versus a retest and a bullish move? Okay, so a lot of traders ask this about reversals, right? What you need for a reversal, right? Does someone have the does someone have the answer? What do you need for a reversal in a bearish trend? What do you need to see? Anyone in Twitch chat have a guess? House of Stacks has got it, right? Yep, grandma, right? A higher high and a higher low, right? You need a higher low confirmation. It is simple as that. But that is not only you just get a higher low confirmation. That doesn't mean, hey, we're ripping up to new high a day, right? Not by any means. Absolutely not. It does not mean that, because what do you have here, right? You have the low, it double bottoms here, and then, right, everyone's like, oh, flip long, right? This is the reversal. We're going to squeeze everyone. Well, talking about our zones, you must always ask yourself, where will price go and where will price test itself next, right? Where are sellers most recently located? Well, obviously, right, this big resistance you would have marked. Does anyone see a pattern here? Anyone see a pattern? Someone type it out in the Twitch chat. What pattern do you see in this area that, highlighted where sellers needed, or where sellers were going to defend and buyers were supposed to force those sellers to begin to cover in order to push for VWAP or maybe a higher high, right? A head and shoulders, right? You guys are saying inverse. I'm not really seeing the inverse. I'm seeing just a regular head and shoulders, right? Yep, regular head and shoulders, right? Look at this. Someone also asked me that. I forgot who asked me. They're like, hey, Maple, you talk about, this is where that seller is, and this is what's a key point, yada, yada, right? Are you reading the tape? I don't read tape, right? I don't use Bookmap. I don't use any of it. I just look at what the chart is showing me. So you can see very clearly here, there's a level right here where sellers are not letting any candles close above. You can easily identify this by marking just a trend line and seeing, hey, did any candle close above? Any candle close above? Sellers are, absorbing all of these orders here, selling over this price level right here. So I'm going to mark that price level out. It pops down, or pops up right here. Left shoulder, head. What is this going to turn into, right? The right shoulder. So you would have seen this. Shorts they have their ask right at 363.05 or right at 363. When this pops up, this is that key level where buyers need to be able to close candles above. Otherwise, these green bars right here, this is just shorts covering, locking in gains, trapping in those novice bulls, right? Trapping in novice bulls right here. No, I don't look at tape. Not at all. Don't look at tape. Don't look at level 2. I look at only the chart, right? Only the chart, and maybe like some bad jokes you guys have in the chat at times, right? So another example here. Another example. Okay. Yeah, I only have good jokes. It's only me. I'm joking. So right here, you can see large upper wicks, right? Draw that trend line. You can see nothing closing above, right? Draw that price level, 364.39. It gave it to you right here, right? Obviously, you can see a supply zone, really just kind of a momentum supply zone, but this was a pivot. Even if it pushes up above this, it has to close and make a higher high with strength. Did that occur? You got one green candle, right? Big green candle. What was the reaction afterwards? Fail, right? Shoves. The sellers are absorbing these buyers right here, and you're not seeing that sustaining buying strength. Selling candle, upper wick, upper wick, upper wick, upper wick. They dwindle down and kill those longs. This is why you do not buy big green candles to go long on calls. That is not a thesis. That is not a trade signal. This is you giving your money to either me or other market makers, right? So, guys, I mean, you can find this, anywhere. You can look at, this is probably tape reading, as close as you can get to tape reading without actually tape reading, right? So some examples here. You can see no candles closing strongly above that, right? You see lower wick, lower wick. You get a one little candle, but that's not anything with strength. Lower wick, right? When price comes back down, right? When it starts to sell off, where price is only developed here and there, you haven't seen this yet, right? You must ask yourself, where will price go? Where will price go? All right? So if price is going to shove down, most recently these buyers stepped in here. You can see that their bid was right at 361.9. When it pushes down, what happens? Their orders get absorbed again, right? But like we talked about, these sellers were sitting right there trying to form that left or that right shoulder, following through with that neckline for the head and shoulders, right? Left shoulder, head, because it breaches above, and then the right shoulder. Now, the common misconception is that, hey, well, head and shoulders need to be completely symmetrical. Wrong. You will never find a completely symmetrical setup, and if you do, right, it's very rare. Okay, don't look for that. They will, everything is contextual, and every moment in the market is unique. You will have different participants every single day within the market. Now, this is the key thing, right? If you're long, like, hey, there's these lower wicks, always read the price action. If you see a candle close strongly into these lower wicks, what does that signify, right? That signifies that buyers are beginning to stop out. Time for you to get the hell out of this trade if you're long, right? This is where you get out. You see, this is scary right here, okay? Now, this may have wicked out some shorts, which is fine, but if you got wicked out here, when it pops back up, look for that left shoulder to be respected. It gave you two opportunities here to take that short, right? Or buy your puts, whatever. Okay, I'm going to try to go through some more examples here. What was I saying? I think I was trading something the other day. I forgot. Maybe it was on Nvidia. I think I was trading Nvidia. I was talking with the donuts about it. Forgot what day it was. I don't know. Sometimes I do. All right, well, I guess this is a good example, right? Now, if this chart is pushing through, this chart's pushing through, right? You can begin to see right here, this tweezer bottom, where price is not closing below, right? Nothing's closing below this. Nothing's closing below. Before, right, if you have that, you mark that, oh, that's not strong. This looks like it's just going to keep shorting down on the 1 minute 9 EMA. Sure, or 5 minute 9 EMA. These are all 5 minutes. You can see that, right? Buyers absorbing. They push through, buyers absorb. Once again, you can see that, right? But how do you beef that up, right? I've said you can just solely mark the support, right? Draw your lower wicks, okay? This is a very tight zone. You can see that this was respected. Now, many times I do this, right? You'll take the tight, small body consolidation prior to the large move up, right? Draw a zone, just capture the candles, right? You can see that. Absorption. This is a horizontal demand. This is what you want to see when you have a demand zone being respected, okay? Maybe, I don't know what other, right here, look at this is from today. Look at this, right? Previous day high supply rejects this demand, right? I've marked these lower consolidation. I think it was like on the 10 minute, maybe something larger time frame. We're showing, yeah, there we go. See all capturing these lower wicks. This absorbed. I drew it based off of this. They fail, right? I draw the previous day low demand. It fails, right? So let's practice some zones on AMD, I guess, on the hourly as to where it may go. Okay, we can see right here, this lower wick, That's going to act as demand, but you have a very broad green bar right here. There's not a lot of orders. Maybe if you look at the zones, you know, I do see that this may possibly be respected. That's still a pretty steep drop. These upper wicks right here, right? Marking these upper wicks, that could act as a previous supply trying to act as demand, right? So I'm going to mark that zone there. This big bottoming wick here, right at 100 to about 101, I'm going to draw that as a demand zone. You can see it was already respected once. Price may gravitate towards back to that 100. I think MG had that analysis yesterday in terms of price rejecting back down to possibly 100. Okay, so how can you practice these zones? Remember, the basis of my zones, the way that I draw them, right? Size of the zone, I mean, not really. I mean, you know, I try to keep my zones around $1, right? A little more than $1 is okay. I don't really draw them larger than that, or I try not to. Sometimes they're $2 just as a general kind of zone, right? And then on the intraday, you can kind of tweeze it down or manicure it down to a much more concise zone, right? But this is a pretty good zone from about 100 to this is 101.62, so that's pretty good. But right, I draw the lower wicks as zones, okay? And then small tight body consolidation. Let me see. I don't have a good example in this kind of analysis. A lot of times in the pre-market it shows. Let me see here. This was a great zone right here. Right, see all these lower wicks? You can capture the lower wicks, right? Just draw that out. You can see it was respected there. Right here, this tweezer top, that was an upper wick. Extend the properties out, right? You see it's rejected here, rejected off of the open. Nice push down, break and base on the previous day low. Continues to the downside, right? So hold on. I want to find something where we can... I know it's been kind of trending, so it hasn't been the best for the zones, but let me see if I can find something on AMD where we were just kind of trading. Actually, I have a trade today on the Qs. What was this? 365 Ps on the Qs. Let me pull this up. What time frame was I trading that? I bought this around 11. Where is 11? Okay, so right here. Okay, right here. What time is that? What was the call out? Let me see. 11:08. 11:09. Okay, so 11:09. Let me mark 11:09 on the chart. Okay, so when we were consolidating right here, right, you can see this range, the high range. Really, you can kind of manicure to more accurate kind of range, and then the low, right, the low support right there. Okay, and then you had kind of a you had kind of a demand drawn from the small tight body consolidation to prior to the large move up. You have a large upper wicks right here. You beef that up, right? You can see on this zone, right, I have this. It's consolidating right there. So on the options contract, okay, on the options contract, I have this support marked at 245. They did wick it down to 231. That's kind of their max stop loss after this wick down. I think it was on this spike right there. But after it pushes back up, I saw the buyer kept hitting this at 250, 250, 250, 250, 250. I saw this a little too late. Had I been watching the chart or paying attention to this option contract, a few minutes sooner, I would have tried to put my bid in around 250 with him. Okay, but instead, I see it pop up a little bit, and I'm like, well, I am buying in a premium right here, 270, but it's still got enough meat on the bone to hit the supply, and I do see targets of about 330, and some targets up here, 406 and 438. Right, and those are from the previous day. Let me see. These are from the previous day right there, right? I just marked the high of the wick and the open of that wick right there, right at 406. So going back to this chart, right, using the supply and the demand, I was able to see my risk 270. So it's a bit steep, right? but I probably would have stopped out right under 250, maybe 245. So still within that 10 to 15% kind of range for a stop. Okay. And understanding on the underlying chart, this was a little bit more shoved out of that supply, but it's still relatively close, right? So I got a 270 average right there with targets, like I said, 317. We had this target here about 3.4, $4, and then 438. Right? And when it pushes through to this demand, right? So that would be the supply for the buyers. I said, hey, when it hits this demand, we should scale out close to 317. That's where they were selling them last time when we popped into this demand zone right there at 1043, right here, 1043, right around this area. Okay, this is where they popped in. So when it pushes back to that demand zone, you should offload some of your puts, right? Locking in that consistent profit. After it fails that demand zone right there, right, you lock in more gains. Now we're hitting 350s, from 270 to 350 in a matter from 1108 to 1146, 40 minutes, right? You're hitting $80 a contract, right? Simply, yeah, here. I don't use this thing, so. Right, I don't use this contract, or what was I saying? Oh yeah, I don't use the theoretical price I was talking about. I don't, I don't have to really worry so much because I understand where the buyer stepped in, and I know my targets. I locked in profit at 290, locked in at profit 217 or 317, locked in profit at 3.4, right? And then I said that I was looking to get my $4 scale, right? And what happens? Price pushes down. Why did I say $4? Well, that's where the price was getting absorbed the day prior, right? Right at the open. That's where those orders were. Where did they hit? Right at $4, right? And they fill more orders back at $4, right? And looking at this demand zone, right? Sure, I can extend that out a little bit. It won't be the best, but it comes very close. I could have drawn that zone a bit more broadly. Maybe like on the 10-minute chart, you could have seen that demand zone a bit more clearly. Yep, totally. Right? This zone, like I said, how do you mark your zones, right? Draw these bottoming wicks. You can see let me clear this chart out. You can see very clearly here, right? You see that lower wick? You see how nothing's closing below it, right? You can draw a zone like that, okay? Draw a zone just off these lower wicks. You can see price comes very close to that. It literally hits 2.7. That was my entry, so I wouldn't have to have gotten out, but I got all out above 4.1, okay? 4.1. Now look at these options contracts and try to use them to the best of your ability every single day, right? It really helps out, especially on 0 days. Tomorrow we have a 0 day and we should be looking at some consolidation charts, right? I mean, what was consolidating today? I think, I don't know about NVIDIA. Let me see if I can find. Okay, right here, this Apple chart. This is a prime, right? What happens after it trends? Normally you get consolidation, trend, consolidation, trend, consolidation, right? Right here in this area, this is about 1020. If you were looking to trade puts, you're probably looking to trade the 175p. So let's go to Apple. Let's go to this. Let's go to the 175p's. Let's send it to 2, right? Okay. And this is that time frame right at 10:30, right? This is how you can use this. Let me go on the 1 minute. All right, right here, about 10:30. Yep. Beginning of this, 10:10. So let's zoom in just a little bit. Right here, you get the low off of this, right? And then you get the high, the resistance. Right here, this is where it pushes up, rejects, right? Bounces down, bounces off of this, right? Mark your support. You can very clearly see here, right? Marking your supply off of this upper wick right here, just that upper wick, and on the lower wicks, marking a demand zone, okay? So it does push through here, and it may wick some traders out, but from 105 down to 95 cents, you really shouldn't have gotten stopped out, right? 10% from 105 is about 10 cents, 10.5 cents. That literally hits 10 cents. They do not get stopped out, right? You should not have gotten stopped out either, okay? When it pushes through, right? Plenty of scales, in this consolidation range. Now, consolidation ranges, you're only trading, right, to take this from zone to zone, locking in your profit, and whatever is extra, you will have the ability to hold on to as it breaches your favored zone, right? If you're buying in demand, you're looking to push price out, push these contracts out of the supply. Okay, and you can see here, right, pushes through, consolidates, right? And then, right, you push up, consolidating, still maintaining that 105, 104 demand right there. It pushes out of that, right? It hits it from $1 to $1.40. Okay, $1.50. That's a 50% gain. When it's consolidating like this, the problem is that traders are looking to trade momentum in the consolidation phase. Once it begins to consolidate, right, you can see when it's going to consolidate. It'll give you the signs, right? This bar, nothing closing above or below, nothing closing above or below, right? It's staying within this tight kind of box, right? A box formation. Okay, so, make sure that you're doing this. This is one of the most beneficial things. Like, we can go to, like, I don't really trade Microsoft too often. Maybe it consolidated some today. Not the best, but you do see some forms of consolidation. Let's go look at, like, maybe the 3 12.5 puts. All right, this is just practice. I want you guys to try to use the options contract chart to the best of your ability. These may not have a lot of volume, right? So it's probably not the best kind of example, but you can see here, right? Look at that resistance here, right? You have support right here from the yesterday, and look, they're absorbing that all at 258. Yeah, it gets ripped down at the beginning of the day, right? 258, 258, 258, this general area, right? How do you beef up that support? Draw your zone out. This buyer here at 258 or 260 to 280 was absorbing this here, here, and here all day. Where was he selling? Selling at this high right here, 426, where he could, but also on each of the pops up, right? Look for that horizontal level that's going to be respected. Remember, the open is very volatile. If you're new, try to stay away from the open as much as you can. Smoke Trade says flags are basically consolidation, right? That's all I saw on Apple was a bear flag. I would say that yes, it is consolidation, but it is not like a box consolidation, right? Obviously, you have that wedge, and there can be that bias at times, right? Like you're saying bear flag or bull flag. I try to stay away from those terms as much as I can so that there's no bias. But, let's see. Yeah, there's some, oh yeah, look at that. This is good consolidation. So right here, you probably would have been trading 232.5 puts, right? Remember, and this is going to fail at the end, which is fine, but 232.5 puts. Charts. Okay, so look, there's that consolidation phase right there. You can see it consolidating. You would have been able to mark, hey, here's the high, here's the low, right? Just by saying, hey, this pops up, it rips down, you have your 2 points. You have to mark your pivots very early on. This trend, it's going to switch over to consolidation, right? Then you consolidate here. What do? You beef up your zones or your ranges by marking your lower wicks close to the support and your upper wick near the supply, right? So going through on this chart, you can see here they have the same kind of formation. You mark your support, mark your resistance. You can hit this from close to $3, right? And scaling out near 340, 350 consecutively and consistently. You don't even have to slap the ask or anything like this. You literally just place an order, maybe a bit of an aggressive order, right click, press buy. Okay, once you're entered into the trade, right click in the supply, press sell, and try to sell there. If you don't get filled in the supply, right, you're going to have to cancel that order, sell on the bid, right? Try to get out with some profit. So use this. This is very key. Many times when we're trading the underlying, we're kind of laggard to the move, right? Many times we're like, oh, I don't know about buying in demand. It's so close. It could just knife down. That's always that fear of it just knifing down. But that fear of knifing down really occurs because it's like, oh, well, this is consolidated for so long now. Now I'm going to go long, right? After this has been battling on for 30 minutes, close to an hour, whatever, you have the confidence kicking in too late, much too late. Okay. I'm just making sure I'm not missing any questions or anything. All right. I'm also going to show another kind of a tool that you can use to hold on to your winners solely by using, EMAs and pivots, right? And moving your stop loss along the way. Excuse me. So let's look at this. This is a good move, right? Just a piece of the chart. Oh shit, we've been going for an hour already. Okay, I'll wrap this up after this and we'll do the giveaway and everything, right? But right here, you can see that EMAs on the 1 are not working for us. So what should we do? We should flip up to our next time frame. Let's look at the 3, right? Let's look at the 3. How is the 3-minute EMA respected? Very well. Very, very well, right? So you're like, hey, this pops up, pulls back. When it pops back up, I will trade off the 3-minute 20, right? So you take a put off the 3-minute 20. Now, what I see many traders do, they get a nice push down, right? They crack the lower low right there. They crack the lower low. But when it pushes back up and hits the 9 EMA, the same EMAs that they just took the trade off of very, not so long ago, this is where they get out. They cut their trade for pennies, right? Leaving money on the table. Okay, why do they sell there? Because they see a little bit of green, the emotions start flooding in, and you freak out. You're like, holy shit, what do I do? They're going to rip this in front of me. This is a threat to my profitability. I need to take what I can before they take it all, right? It's just all of that fear. So, but if you took the trade off the 9 and you just have taken it, maybe some other traders miss that. They miss the EMA entry. So when they miss that EMA entry, they're going to take it on the next one, right? Push up, first pullback, second pullback. This is your prime entry for this kind of leg or this trend. Okay, so how could you have stayed into the trade without freaking out? Obviously, right, if you entered here, you would have been looking at the EMAs. The EMAs did not tell you to stop out. Your stop loss should have been above the 20 EMA, your trailing stop or mental trailing stop. And it wouldn't have stopped you out until about here, right? So you could have taken that trade from 365 practically all the way down to 362.50. So about 2.5 point, 3 point capture just about. But maybe you get wigged out on stuff like this. How can you beef up your trade or how can you move your stop loss along the way if you're trading 1 contract, 2 contracts, whatever, right? So if you have taken an entry there, bringing it solely back to the basics, guys, your pivots. Mark your lower high, right? That's your stop loss. When it pushes down, you see the next rejection. Mark that. That is now your stop loss. Pushes down, right? This is where the next wave of shorts come in. This is your new stop loss. Don't change your stop loss. Like, many times I see this. Oh, we cracked the lower low. This is my stop loss. It pushes up there. You're instantly out. You're obviously instantly going to be out. You have to use the supporting pivots, right? So if I'm long, all right, I would have used like higher low, right? Higher low. This higher low fails, right? You would have gotten out. Okay, but if you're in this trade, marking your lower highs in the bearish trend, this is how you trail your stop in accordance to your EMAs, right? Pushes down, pops up, move your stop loss. Now you're really green on the trade and you're very confident. You're like, hey, I'm going to stop out either if the 20 fails or if my pivot fails. Pushes down, rips up. This is your new stop loss. Okay, here we go. Pushes down, rips up, pushes down again, right? New stop loss right here. Stop loss enacted. Why? Your 20 EMA fails and your pivot point, your lower high, creates a higher high. This is where you get out. Remember, you're only looking to capture pieces of the market. Okay, so instead of taking your trade from here and getting out on the next entry for the short, right? Selling for pennies, you're able to hold on to this trade, marking your pivot point lower highs, as well as in confluence to your 9 and 20 EMAs to the downside. EMAs fail, pivot point fails, you stop out. You've taken this trade from a very, prime position to a very prime exit, trailing your stops along the way. Okay. I don't myself. I don't, because I can visually see the lower highs and higher lows, and what all the other pivot points, because I've traded them for so long. If you're new and you have an issue with this, you need to do this. I'm telling you, I used to do it. You have to do this. It is really going to showcase to you where those buyers and sellers most recently are and what is the health of the current trend, right? If you're trading from a macro perspective the entire day, right? These little pops up don't matter. They obviously don't show up on like a 10-minute chart, right? So on the 10-minute chart, same thing. If you're taking a trade, you're like, hey, I got a really good entry off the open. Maybe I do want to hold on to the trade all day, right? Mark your pivots. Well, you push down, right? Lower high. Pushes down, gives you another opportunity for a lower high. It reverses, it confirms that, mark the lower high. Still in the trade, pushes down. You haven't cracked the lower low yet, right? Which is your goal. You're looking to force these buyers to stop out. When it pushes up and gives you a rounding top in confluence with the 9 and 20 EMA, that's your new stop loss right there. Right? You crack the lower low, you lock in your gains, okay? You lock them in. Just mark your pivot points. For practice, go on your 10-minute chart, whatever, and draw these pivot points out. You must, okay? So like on this day, you have pivot point, lower high, lower high, lower high, and then right there, someone may have gotten wicked out, but that's fine because it does rip up. But you're able to stay within the trade using the EMAs and your lower high pivots, right? Let me see if I can get a bullish trend on here. Right here, bullish trend, higher lows, right? You have higher low from pre-market. This is a dark pull wick, so I disregard that. Higher low right here, right? Pushes down. You see the curl, you see the buyers, higher low. Pushes up, curls, right? Higher low, right? You are staying within that trade on each of the higher lows. Pushes up, breaks and bases on the previous high right here, higher low. You're still in the trade. Your stop is not enacted if you get into an entry with a tight risk, okay? Do you leg it out when it hits the zone? So what do you mean, like scale out? Like if I get a lower low, like this support level cracked, I'm locking in gains for sure. Because if I don't lock them in, someone else will. And what I mean by someone else will, the shorts will buy and wash out my profits on my puts. Okay, so I think I'm gonna wrap it up here. We're gonna have more live sessions this week. Tomorrow I will not be having a live session. I will be live trading. Dark pull wick, sure. I can go over this really quick. So right here, this you may have considered a dark pull wick, but like we said, 60 to 70% of the time we see them enacting, following through, where price will come to fill these wicks. Let me see if I can find one. Okay, right here, right? Big dark pull wick, right? Price pushes down off of the open, looks and gravitate towards that dark pull wick. Maybe I can get, there we go. Let's see. Big dark pull wick, right? Off of the open, price is brought down and fills this dark pull wick. This is inaccurate price action, but valuable to us as day traders, as it is data that we can make money off of, okay? Let me see if I can find another one. Right here, dark pull wick, right there. You do not count these. If I'm marking pre-market high, I'm marking this. I'm not marking this, because that's not the pre-market high. This is a dark pull wick. What happens? This dark pull wick, right? Price tends to gravitate towards it. You can see price fills in this wick and has a hard time continuing forward, okay? Let me see if I find another one. This right here, dark pull wick, right? Mark it out. price tends to gravitate towards it, right? Filling in some of these orders. I don't know exactly why, price tends to gravitate towards it. This is just a consistency in the market that I have seen, okay? You can see right here, this dark pool wick, price did not gravitate towards it. It is not something, just like anything else in the market, no tool, no strategy is 100% foolproof. That's why I said 60 to 70% of the time you will see that dark pool wick being respected, okay? So, tomorrow morning, guys, I will be live on Twitch and in the Discord starting at 8:30 in the morning. Right, I hope that you guys found this live session beneficial, right? I'm going to do the giveaway. I'm only going to give away one spot into the membership tonight. Last night we did 3. So we'll do 1. Keyword, we're going to say... let's do the keyword right here. We're going to put QQQ, okay, QQQ. Okay, that's the keyword. So let's see some QQQs. You will get your entry in here. I'm going to do 1 spot, okay, 1 spot. Not in the Discord, guys. Oh, shit. But, guys, tomorrow, right, I really want all of you to be able to follow your rules, try to apply some of the lessons that I've been teaching the last few days. I really want everyone to use your EMAs on a larger time frame. I know I use the 1 minute, but many times I use the 1 minute EMAs and then I flip over to the 3 minute, 5 minute, 10 minute, anything like that, okay? So that I have a much more clear understanding of where price is actually going in their direction, right? On NQ, I watch NQ more than anything than the Qs. I look at this on the 5, right? I know right here, when this was super far extended on NQ, I was like, hey, we're going to need a 5 minute 90 MA touch, right? A pullback. As soon as price hits that 5 minute 90 MA, those algos come in heavy and short it down, right? Another, what is this? 14,964, 14, right? Another 10 points, right, to the downside. Very, very nice. Where did my thing go? Okay, here we go. Right. We got 86 eligible entries, right? We're gonna do one. Let's see. You have to be not a member of the Discord, right? I want someone who has not had the ability to join the group yet to win, right? So I'm going to roll it. Let's see. Thank you guys for the subs. I appreciate it. Also, if you want to join the Discord, if you don't win or whatever, if you're just looking to join, right, I live stream every single day, 5 days a week, right? I rarely miss days. I don't think I've missed a day unless I'm going on like vacation for a day or 2 or whatever, or family situations. We have live sessions like this 3 to 4 times a week. I have a whole video library of all of the previously recorded live sessions. We have over 100. I've talked about that yesterday. But if you're really looking for a cohesive community that is very focused in terms of trading and all like-minded, looking to put their best foot forward every day, I have cultivated a very strong, tight-knit community that is just that, right? It'll be on Twitch, right? I stream the first week of the month on Twitch, and after that, I just hide away in the Discord. So let's roll it, right? Let's see who wins. We have Noble Smoke, right? Noble Smoke has won, and he's a subscriber. So if you won Noble Smoke, please send me a DM on Twitch, right? He said, oh shit. Send me a DM on Twitch, and I will get you your invite, right? I got the other guys who won last night into the group, and we washed out the other ones that were straggling last month. So you guys, I am looking forward to trading with all of you tomorrow. We had a very good day yesterday, right? I mean, guys, I had multiple $100 of winners, right, per contract. I'm talking about not just total position size, but per contract. You know, I'm calling out things, trading things, walking them through, and giving you my thesis as to why I took the trades, right? Yes, Twitch is free. You're on it right now. So I will catch everyone tomorrow morning, right? I hope that these help. I hope that the live sessions help. I hope that the live trading streams help. You know, I'm really trying to give you guys the opportunity to really hone in on what is simplistic in terms of the market, right? The market is can be very confusing and maybe complicated, right? But it does not have to be over, you know, it does not have to be, right? It really, I'm using very simplistic, very basic concepts in terms of the market, right? Supply and demand, support and resistance, 9 and 20 EMA. You've heard of all of these before, but I use them with precision and finesse, and we profit a lot of we profit on a lot of plays and consistently giving us low risk setups. Majority of the trades that I took today had about 10 to 15% risk with 50, 60, 80, 100% gains, right? Risking very minimal to make a lot. Okay, so I hope that you guys are following through with this, taking notes. These are obviously recorded, and I think Donuts will post it on his trading channel or on his YouTube channel. So I will catch you guys all tomorrow morning. It has been a pleasure. I appreciate you guys giving me your time this evening. And good luck to you tomorrow. We will follow our rules. We will take profit. And we will walk away very green. I am excited to trade 0 days tomorrow. If you are new, please stay away from 0 days. Trade the next expiry or trade IWM something. Okay? So take it easy. See you guys tomorrow. Get some rest. Drink some water. And have a good night.